This podcast is brought to you by True Resources, connecting talented people with the best mining employers in the Australian market. For more information, head to trueresources.com.au. So hello, I'm Ben Kostrich and this is the Market Bull Podcast. Joining me on the show today is Paul Lapier, the Managing Director of Strickland Metals, which is listed on the ASX under code STK. It's focused on gold and has two really quite world-class projects across the world, and we're going to be diving through a lot of what's been unfolding and some recent drilling results, which, as we're recording today, Thursday the 22nd, some results just came out. But first time doing a podcast and first time on the show. Welcome, Paul.
Thanks, Ben. Thanks for having me.
That's all right. We'll start with a bit about yourself, because we could say this might be the first time explaining your background to listeners around the world, and at least on a podcast. So talk about your history and your rich history within mining briefly, and what path brought you to Strickland Metals.
So I'm a geologist by background. I studied here in Western Australia at Curtin University. So I finished my honours there in 2002. I was studying in a project in Kenya at the time, actually, and so I finished that project, got my first opportunity the following year working for Anglo Platinum in South Africa. So spent about a year there, then came back to WA, started working at Fortescue in the early days. I was the first geologist with Fortescue at Christmas Creek, so I ran the first drilling program there. Then I left Fortescue to go to Goldfields, spent another year there. And at this stage of my career, I sort of had a goal to try and get as much experience in as many different commodities as I could. Then I had a really amazing opportunity to go up to Mongolia. I spent 3 years doing exploration up in Mongolia, primarily coal, but a bit of gold as well. In my time up there, spent also time in China, Philippines, Indonesia. Then I got a call back from Fortescue asking me if I was interested in coming back. So I then came back in 2008, just before the GFC. And my role then at Fortescue, we went into New Zealand looking at the iron sands and also coal, because I'd been doing coal exploration in Mongolia. I thought I'd be a good fit to sort of run that business there. And I think I landed in New Zealand a month before GFC. And I remember getting a phone call. I was out in the bush looking at a coal project, and my boss at the time, Eamon Hannon, called me and said, "Where are you?" I said, "Oh, I'm out looking at a coal project." He says, Go home.
Oh, my gosh.
Don't leave home. Don't spend any money."
Wow.
So that was pretty interesting times when the GFC hit.
Yeah.
Obviously, Fortescue had just got Cloudbreak up and running just before the GFC, which took an amazing effort by the team. And managed to just scrape through at that time. And then a couple of years after being in New Zealand, I came back to Perth to run the exploration team at Fortescue. So that was, about 2010. Did that for a couple of years, worked with the BD team, started looking at opportunities overseas, primarily in Africa and primarily around copper and coal. And then again, iron ore price crashed late 2012. And, we had to offload a lot of our staff. So then the following year, I thought, it's time for me to sort of have a change and go my own ways. So I left Fortescue early 2013 and set up with a couple of guys from Fortescue what became Iberia Capital. And Iberia took us a couple of years to sort of raise that fund. The first fund was $70 million out of US. And we invested primarily in two projects. So one was the old Azuma Resources gold project in Ghana, and the second one was Rogozna in Serbia. And how did I go from Iberia into Strickland? Well, with Iberia, so with Rogozna Asset, we were looking at IPOing that asset. Last year we started the process, got through to sort of March this year. We'd just finished the road show. In the background, Strickland had some really good success. And in the Yandel belt, they'd obviously sold the Millrose project to Northern Star. So they were cashed up and looking for other opportunities to help grow the business. And so late last year, they looked at Rogozna and quite liked it. But at the time, their share price went for a run to 20 cents, and the whole market sort of expected that, their sole focus would be in Yandel while they figured out what they had. And then when we did the roadshow for Rogozna, we caught up with the Strickland guys really just to say g'day and see if they were interested in participating in the IPO. And I think by that stage, the share price had come back a fair bit. And they thought, well, hang on, maybe now is a good time to transact on this asset. They obviously liked it. So we sat down and we nutted out a deal. And so that, as part of that deal, the Strickland management were keen for me to come across and take over the MD role, which I was more than happy to do. Back with Iberia, we did some research several years ago looking at the WA gold space and really just looking at what areas were prime real estate really to invest in. We were looking to deploy capital. This was sort of back during the COVID days when gold was going for a run. And Strickland's project was one of the top 3 that we identified.
That you would like to potentially
I would have liked
buy.
to invest in through Iberia.
Yes.
So, obviously not owned by a major, but, really strategic in terms of its proximity to an operating mine. But importantly, the upside. With Iberia, our mandate was really focused on assets where we could identify a lot of geological upside. And, certainly the Yandel project that Strickland owns, we think is right up there with some of the best in the state for upside. And, our goal now is to demonstrate that to everyone and show we think there's real potential there for another multi-million ounce gold camp like Jundee.
Yeah. So I mean, going back, the project transaction was, I can't recall if it was this year or just last year, but the conversation been going for a while. But clearly that whole pivot changed from moving Iberia with the 2 projects to then becoming, almost leaving that and then forming and joining Strickland. Talk us through. You said Strickland had a fair bit of cash sitting on the sideline and they were looking. When they were looking at Serbia and the project you've got there, what were some of the standouts that were progressing that conversation, because then eventually it became the sale and brought you across as well?
Rogozna is a pretty interesting asset. Geologically, it is very rare. And certainly on the ASX, there's not many projects like it. Australian companies obviously tend to mainly focus on Australian assets. But this style of mineralisation that you have at Rogozna, it's a porphyry-related project. So the Canadians and North Americans play in this space a lot, obviously given their proximity to South and North America where there's a lot of porphyry projects. So they're very familiar with these assets. In fact, Rogozna for the previous 20 years had been owned by Canadians. So it used to be owned by Phelps Dodge prior to their merger with Freeport. Eldorado Gold had it before Iberia. And so, this
substantial amount of work as well previously.
Exactly. So over 20 years, it had been sort of systematically explored, but a little bit piecemeal. Sort of each company that had it did a phase of exploration. And, there was when Iberia got it, it had over 80,000 metres of drilling. About sort of 40 million had been spent on it at that point. Iberia spent another 25 million on it, did another sort of 25,000 metres of drilling. And, but one of the consistent themes of it was each time another company sort of took it over, there was another discovery. So Freeport focused on one deposit.
So everyone had a different intention when they took over.
Everyone, and you got to measure. The other thing that comes into it is time and timing.
Yes.
What's the commodity prices doing at that time? So when Freeport had it in the early 2000s, gold price was in the toilet. They were mainly looking at it for copper. And they drilled out what's known as Copper Canyon. So that's got about 800,000 ounce gold equivalent resource, roughly 50-50 copper gold. But what they were looking for a porphyry, didn't find it. Found a nice sort of decent grade copper gold skarn outcropping at surface, but it wasn't big enough for them. Multi-billion-dollar company. So then they sold it to another company, Euromax, which was just an exploration company, but they had assets all over Europe, and they made a discovery, and then they got in trouble. They were spread too thin across Europe. Markets turned again. They had not enough money. They had to get rid of most of their assets. They became a royalty company. So they sold it then to Eldorado. So when Eldorado came in, they were looking for a big, high-grade epithermal deposit. This style of geology has multiple styles of mineralisation. So
is that what you were saying about being rare?
Yeah,
it's
rare.
just such a...
It's not just one thing. So, you've got the obvious one is, we've got these 4 skarn-hosted gold deposits, each with slightly different metals mix, but you've got porphyry copper potential as well, and you've also got epithermal gold and epithermal base metals. So you get multiple styles of mineralisation in the same volume of rock. And so you get one bit of metal, then you get another bit thrown on top and another bit. And
it's just layers.
Yeah, it's just, and it just upgrades the amount of metal in the whole system. So El Dorado, they were really looking for high-grade epithermal deposit. Didn't find it, but they did find a great big bulk tonnage deposit in Shanats. And then they got in trouble. So back in 2019, El Dorado had just brought on Lamarck. They were having some issues with their processing and recovery in their Turkish operations. They were having real issues with permitting Skouries in Greece. So their market cap was less than half what it is now. And the basically management said, all right, there's no budget for anything other than operations. So any exploration project is now non-core, get rid of them. And with this case, with Rogozna, it only had 1 year left on its exploration licence. So with Iberia, we were looking in the area fundamentally, trying to replicate what Adriatic did. When they listed and they put out their drill results, as a geologist, I was blown away by the results. And I just thought to myself, there has to be other assets like that in the region, not necessarily with the same grade, but just in terms of off the radar, not really known about, underexplored. And I actually used to work with a team of Serbians when I worked in Mongolia. And so I maintained those relationships. So I called up my friends in Serbia and said, hey, do you want to help me try and find another Adriatic? So we spent 6 months looking around the region for, advanced stage assets. Again, Iberia we only invested in advanced stage things. Our US investors weren't interested in speculative exploration. We needed to be able to almost build a spreadsheet to show them an IRR on what this asset would look like. So it had to be enough drilling that we could do that. And
couldn't just find a package of land and just go, we're going to hope that there's something there.
Yeah, so, and that's our skill. And when we looked at the data of El Dorado, and El Dorado had done an amazing job. They had great geologists. Their local team were really good. So when we looked at the data, I was sitting with my resource geologist looking through the database, just at the assays, just staring, looking across at him, just going, what the, so I jumped on a plane the next week, went there, checked it out, had to see it. I looked at over 100 projects with Iberia, and we only invested in 2, and this was the second one, and it was just too good not to. And it was a couple of reasons. Firstly, what El Dorado had done, and the guys before them, in terms of finding what they'd found. They'd found 3 deposits, across those 3 explorers. So in the data, you could see those 3 deposits. You could see that particularly Shanats was really big. You could see it did have some high grade within it, but it wasn't really well understood. But importantly, the other bit of data that they collected, which was really good, they did heap of geochemistry, heap of geophysics, heap of mapping, and it showed another system to the north called Medenovats. And, there'd been some drilling around it, but nothing had really nailed it.
Yeah.
And we just thought, well, not only of what they defined so far looks pretty good, but we think there's a lot more. And particularly starting with Medenovats, but even just in the broader area. So we did the deal with El Dorado late 2019. Then the first thing we did was renew the licence, because I only had 1 year left. So we renewed the licence at the same time COVID hit. So normally coming out of Fortescue, so my culture would be to go in and just smash things pretty hard. Just push really hard.
Yeah, boots on ground.
Try and do 4 years of work in 2 years. And but with COVID and the whole relicensing, we had to sort of take a breath, and that really allowed us to evaluate, particularly the El Dorado data and the geophysics. We got all that reprocessed and had 3D inversions, which is just a really complex way of saying we got really smart people involved.
Yeah.
A lot smarter than me. And what came out of that was a couple of anomalies that weren't previously recognised in the data. And so when we finally got the licence renewed in the July of 2020, we rolled the rigs in, and essentially the first few holes we drilled, we made 2 discoveries. And essentially in the space of 6 months, we'd renewed the licence for another 8 years, And with these two discoveries, one being Medenovats and the other one, an extension to Gradina, we'd essentially doubled the resource potential in that first 6 months. So by that stage, we were pretty excited. And, we spent the next 12 months doing more drilling, understanding Medenovats and Shanats more as well. We drilled some extra holes in the Shanat, started to hit more and more high-grade zones as we sort of closed the drill spacing. And with that, we got a bit of a better understanding of what's controlling these high-grade zones. So,
I mean, across them, you're saying the names, there's quite a few projects within the Rogozna, system, or I don't know how to best describe it, your system. I mean, when you're looking at this, to paint the picture of how much land and how deep, can you elaborate a little bit more about each individual site or potential deposit you've got going on? What is so exciting about each of them? Even though there's probably a lot, and that's the difficulty of being explaining it all.
So as I said, currently we've got 4 deposits we know about. And so, the Copper Canyon, that's the outcropping one that Freeport were focused on. So that one is essentially, what you've got there is kind of a 20 to 50 metre thick blanket, relatively flat lying copper gold, running, a gram gold, 1% copper, sometimes a bit more, but that's basically what is in it. And then it's got a lower grade halo, but that occurs at surface. We've optimised that. It optimises into an open pit, about 800,000 ounce gold equivalent. Shanats is currently the biggest. That's the one with 4.6 million ounce gold equivalent. That one's a little bit different. That one's 60% gold, 20% copper, and there's also a bit of zinc, lead, silver in there as well. That one starts under about 80 metres of cover. So that one, and it gets a bit deeper as you go north. So that one we look at purely as an underground play.
Yeah.
But that's the one we've been drilling and releasing these results, like last week, where we hit 90 metres at 4 grams in one zone, and then we hit another sort of 100 metres of copper gold beneath that. Today's results, we hit over 308 metres of almost continuous mineralisation. So it's with Shanats, it's an interesting play because you get these massive intercepts. Sort of the 300 metres sort of interval, it's probably 200 metres true thickness.
Jeez.
And that's, running almost 2 grams gold equivalent. I know a lot of people have a few issues with the gold equivalent aspect, particularly here in WA, where when you're talking about gold in WA, you're just talking about gold, so people understand it. I think the key difference when obviously gold equivalent means there's other metals in it and starts to raise a few questions around metallurgy and recoveries. But we've done quite a bit of met tests where, particularly on Shanats, that shows most of the metals, we're looking at sort of 80% met recovery across the board. You get a really nice copper gold con out of it. So Shanats, you get big fat intercepts, but you also get these high grade zones like last week, 90 metres at 4 grams.
Yeah.
So Shanats becomes a play on the grade tonnage curve. So when the majors have come to look at this project, and we've already had several come to the project a couple of years ago with Iberia, and also several have reached out in the last month as well.
I was about to say,
that is the beauty of this project. It is attractive to the majors. It's
hitting that amount that is actually worthwhile them getting involved, as opposed to what you said earlier, which they just farming it out because it's not enough
big
tonnage.
enough. So when the majors are looking at this project, they're really looking at it from a bulk tonnage mining scenario, and Shanats definitely offers that opportunity. But importantly, with these sort of high grade zones, you've got the other end of the spectrum as well, which is more of an Adriatic style operation, sort of 1, maybe 2 million tonne per annum, just chasing the high grades. And it really just comes down to where do you want to be on that cost curve, CapEx, all of those things. And, but most importantly with Shanats, we've just got really good optionality because of that. And it's going to grow more as well.
Yeah.
It's not closed off in any direction. It's open at depth. It's open to the north. So it really is a fantastic deposit. The third one, Gradina, that one's different again. That one's gold only, or 90% gold. So it's probably the simplest from a processing perspective. And that one's a little bit, certainly geometrically, looks a bit more like your classic WA gold deposit, sort of steeply dipping gold zones. They're sort of generally anywhere from sort of 5 to 10 and up to sort of 20 metres thick. We get multiple of them, and we've got 1 kilometre of strike that we've drilled so far. So that's not in any resource at the moment. Okay. We're actually going to start drilling there in the next month again. And the goal for Gradina is it's actually to chase it up dip towards surface. So historically it was drilled from a valley. When you drill from the valley on an angle, you hit this mineralisation at sort of 400 or 500 metres depth, up to 800 metres depth. But it hasn't been drilled above. And all the data we've got suggests it should come up a lot higher.
Interesting.
Whether it gets to surface or not sure. We'll test that this year. But that's what the drilling's for. And then the fourth deposit is called Medenovats. So that's the one, as I said, when we were doing due diligence, we thought, there's got to be something here. Like the system looks too big in geophysics, geochemistry, that there has to be something there. And in our first campaign, we drilled a hole through the guts of it into this geophysical anomaly, which had, over 300 metres of mineralisation, including a 100-metre zone running about 5 grams gold equivalent. So now that one's a bit different again. Metals mix, that one's got higher base metals. So 60% of the metal there is copper and zinc, with about 30% gold. Okay. And we're currently drilling that one at the moment. We've got 600 metres of strike that we've proven up the mineralisation, and the aim there is to turn that into a resource by sort of middle of next year. But so those are the 4 deposits, and we're pretty confident, just based off what we understand of the system, plus all the data that we've got, geochem, geophysics, we're generating more targets all the time. We're pretty confident there'll be more deposits there.
Jeez.
And we think we're one deposit away from really, taking this from sort of, we've got visibility from the sort of 5 million ounce gold equivalent resource. We're pretty confident we can double that. And if we can make another discovery or 2,
leapfrogs.
Well, then it's another level up again. Yeah. And that's just rare, right? It's so we think it has huge strategic value. The other important thing about it is, it's in a historical mining district. So we've actually got an operating mine, the Srenats mine. It's one of the old Trepcha lead, zinc, silver mines. That one's operating still today, and it's 4 kilometres from Srenats. So it's important when it comes to, viewing this project through a lens of, what does a potential development pathway look like? Well, the fact that it's in an operating mine area should help.
So then, again, with those 4 projects, and as you said, potentially a 5th, how are you prioritising and timelining and mapping all this so that all of them are realistically, you can't bring them all on at the same time? So how are you strategically thinking about which ones are on the pecking order of 1 down to 4, which is kind of hard to say, but how do you best feel that that's going to be able to crystallise value for shareholders going forward?
So how do we do it? A lot of juggling.
I can imagine, given the sounds of it.
So we've got 4 rigs at the moment, and 2 of them are on Shenats, 1 Medenovats, 1 doing exploration, and we'll probably bring a 5th rig in the next month or 2 to start drilling Gradina. Really what we're trying to figure out there from a potential development scenario is which of these 4 deposits gives the best bang for buck in terms of CapEx and IRR. And so at the moment, the gut feel is it's Shenats or possibly Gradina. So with the drilling we're doing at Shenats, the idea being once we can, drill out more of this high-grade mineralisation, we can update that resource. The updated resource will have a higher grade component in it. So the old resource, the 4.6 million ounce, is just a big bulk tonnage resource, no domaining of the higher grades. So the only way you can assess that resource is through sub-level cave mining scenario, which obviously for a $200 to $300 million market cap company is not necessarily the best way forward. Now, the idea being when we do it again, we'll be able to then assess it from a more selective mining, more of an Adriatic scale scenario sort of. So we think Shenats is pretty well placed to be the first cab off the rank just because it's more advanced in terms of drilling, so it's faster, quicker, less drilling to do. But if we can bring Gradina closer to surface, not necessarily talking about an open pit scenario, but at the moment we've modelled the mineralisation to 400 metres depth. If we can get that even to 200 or 100, bearing in mind Shinat starts at 80 metres depth.
That's massive scale.
You don't have to go down very far. And Gradina being 90% gold and quite simple metallurgy, that could end up overtaking Shinats to be the best bang for buck because your process plant's a little bit simpler. The underground development cost is the same either way, so it just becomes easier. And so really what this project is, it's all about optionality. So which of these deposits comes on first, and that's, as I said, based off best bang for buck. Then you bring that one on, if all the economics work, and we don't know that yet, we'll probably do scoping studies hopefully by the end of next year, at least on one of them. But if it works, let's say it's Shinats. Shinats comes on first. All right, then at some period after that, you're probably bringing on the second one, which is probably Gradina.
Yeah.
It's all going to use the same process plant. The metallurgical test work, they all use similar flow sheets. So you don't need 4 separate plants. It's one plant. You're bringing on one deposit. You're mining it for a bit. You're bringing on the second one. Later on, you're bringing on a third, a fourth, and it just and we're really keen here. If, as I said, if mining is economic, we're really keen to see a mine development that has the longest mine life possible, and that's feeds into sort of sustainability. What's the most benefit for the local community? They were, generally speaking, local communities would much prefer a 30 or 40 year mine life.
Well, keeps them employed, keeps them training.
The next generations. And so and I'm really focused on that. So, what I'm primarily focused on there is, to try and deliver, a really nice project that can be developed sustainably and, have a really long mine life and be of real benefit to the local communities.
And are you finding the engagement from a bunch of those communities really in Rogozna are quite open to this? And I mean, what are the conversations? Because the parallels, as you've talked about with Adriatic, that's been transformational for that community. And drawing those two together, you could say it could be very similar for Rogozna. Is that, how are they feeling about that? What's the potential, I don't know, thinking ahead, what sort of things you want to bring in place to help that?
So, we've been very mindful of the, community engagement and trying to do things the right way, since Iberia acquired the project in late 2019. But when we were private, we were sort of able to keep sort of our heads down. And this is a little bit, I guess, with the backdrop of what Rio Tinto have been facing in Serbia. I'm not sure if you're across that, but there's been quite a bit of opposition, environmental opposition against Yada, and it's it sort of reared its head a couple of years ago. Rio's licences got cancelled. Rio stayed there in the background, chipping away, playing the long game as they do. And then recently it's come up again, and the Serbian Constitutional Court ruled that the cancelling of the licences was illegal. So basically, Yada is now back on the agenda. A lot of the opposition to that has now sort of risen up again, and it's and I guess it's on the forefront of now everyone's minds in Serbia, because
of what's happening.
With Yada. So now, so when we came in 2019, everything was good. The whole Yada situation was all smooth. Then probably 12 months later, I think, was when it started to get a bit ugly. And so we've been very conscious of, I guess, trying to avoid
going down the same path. The temperatures are varied.
And we were private, so we're able to just do things a bit more quietly, I guess. We're not trying to be, we're trying to be as transparent as we can, but certainly when you're private, you don't have to bang the drum too much. We just sort of do the right thing. Now that we're public with Strickland, we are cognizant of the fact that we we are going to need to be more public about how we deal
And
with
the
our
reporting, the
engagements and
updating, yeah.
reporting. So we do have engagements, obviously, with local community, both up on the mountain. Now, where the project is it is in the mountains. Not many people live up there, but we have day-to-day engagements with them because obviously we're drilling up there, we're doing geophysics. We have interactions between local people and our guys, pretty much daily. We sort of step outwards from there. The nearest town is a town called Novi Pazar, so that's a town of about 70,000 people. So we do have some engagement there, and we are looking to increase that engagement. And we're trying to beef up our team a bit on the run, a little bit. But certainly the idea being is we have to form a good relationship and have a social license to operate. To if this project's ever going to have a chance to get developed,
of the project.
And so as a general rule, Serbia is a mining country. It is Europe's second largest copper producer. They've recently signed an agreement with the EU to provide basically all of the EU's lithium from Yandel, but also copper. So it is a country that does have a long tradition of mining, and I think that'll continue. But what's important is there's a lot higher scrutiny these days.
Yeah.
And you just need to make sure you're doing everything in the best possible way and showing along the way that we can develop a project here that has the least environmental impact as possible. And these days there's some amazing underground mines in terms of the standards that are being developed, and we just need to be able to demonstrate that can be done. And that there is a real benefit for the local people. So if there's no benefit, why would they want to see a mine in their backyard? We have to build trust. We have to be transparent. There has to be some local benefits. As we build our team and really get stuck into this project, I think it's got to go a long way down that path. And as I said, hopefully we can build that trust, and the people of Novi Pazar and the people on the mountain are really part of the project, and they see that it has benefit for them. So.
I mean, your knowledge of this area is substantial, and this is given probably from the original position you were sitting in, where that was your sole project. And flashing across almost to Australia, to Western Australia, Strickland had the money, bought Rogozna, but while simultaneously you were looking at doing potentially the similar thing with the West Australian asset. I mean, now that you've got really both of them, and you could almost say it was the stars aligning that simultaneously you were looking at it and vice versa. I mean, give us a bit of an indication as to, while this exciting stuff is happening in Serbia and Rogozna, you've also got WA and the gold project there, which is substantial. Talk us through a little bit about how that's also, at the same time, on the same, if not same level, happening.
Yes, as I said, we liked the Yandel project from a long time ago, and that was before we really actually had any great understanding of it. We just liked it from a high-level geological perspective and strategically, being close to Northern Star. But now that we're sort of been able to look under the hood, I guess, since I started the job, and also John Hronsky, who's a leader in sort of understanding mineral systems. So he's been doing some work with the local team, the Strickland team. So Peter Langworthy and Richard Pugh and our team. We've just come back from site yesterday, actually. And what's emerging there is, where we've been drilling there at Yandel, the Horsewell Gold Camp. When you start to pull that apart, it actually looks like this could be another multi-million ounce camp, because historically all the drilling focused on the southern end, where there was basically some gold anomalism in soils and what have you. But when you look at the geology, where all the drilling is, it's all that bit that was sticking out of the ground. And there's a sort of an imaginary line sort of halfway across the camp. And you go north of that and you've got what's called transported cover. So the geology becomes buried. And in that area where there's that transported cover, the average drilling depth is only about 50 metres. But the geological structures which host the gold, when you look at all the other data sets, the geophysics, the gravity, the mag, it looks like it just keeps going.
Yeah.
But the amount of drilling to the north is hardly at all. So, and this is not an uncommon thing, right? You know, gold deposits or any deposits.
Well, it's like as soon as you find it, you just go, cool, I'm just about that. There's no point.
Back in the old days, someone tripped over it and go, oh, this looks interesting. And that's a common phenomenon everywhere across the world, but certainly reinforces our belief in Yandel that the work we've been doing to date, and we've already put out some really good results from Horsewell this year. We're fine, as we're drilling underneath the shallow drilling, we're getting really great results in the fresh rock. First time there's ever been any diamond drilling done across the project, so we're actually getting a much better handle on what's actually controlling the mineralisation. All of this new mineralisation we're hitting is totally open, and then this is only the southern half of the system. The whole northern half is even less explored, and all of this pretty close to operating mines. So we're super excited about what's going on at Yandel, and we've got a heap of results to come back over the next sort of few weeks, and we'll pull all that together. That'll give us a bit of an idea on what we've currently got at sort of Palomino and Clydesdale, Warmblood, Bronco, Conic. We'll have probably do a resource upgrade by the end of the year, and put a resource around that stuff. But to us, that's just the beginning. I think we're going to go really hard next year at tracing, testing the rest of that gold camp. As I said, at least twice as big footprint with hardly any deeper drilling at all. So
well, and I mean the other history of it was to get the cash that Strickland did. They previously sold an asset to Northern Star, and that's another thing that is different with Strickland is there's a lot of projects and a lot of potential, and there's also cash in the bank. And I can only imagine that as this grows and Strickland does the grunt work, that players like Northern Stars might be monitoring or watching and seeing what's unfolding to see what happens there as that becomes another potential. I'm not putting it out there, but it does go on the radar that if this does continue to grow, that's another potential, because it looks like the team's already managed to do it once.
Yeah.
Companies are pretty adept at continuing to do sales and transactions into the future. So, I mean, going into the next year, you say you're going to be building up the resource. Is that all just going to be doing through drilling and evaluating the results? And where can you potentially see this scale going as much as it is, open and it's really, as all explorers would be, it's quite exciting because it could go anywhere.
Yeah, so we are going to, it's not just the drilling, so we are going to be doing a heap more work. So we've recently done some geophysics again, and we're doing a sort of deep drill hole at the moment at Great Western to test a conceptual target there. But fundamentally what we've realised is most of the exploration over Horsewell and in fact within our whole licence area there at Yandel is most of it was sort of done back in the 90s. And things have changed a fair bit since then, both from, drilling capacities, geophysics, but also understanding of how these systems work. And that's where having someone like John Hronsky on the board, and who I've worked closely with for over a decade, he's really at the forefront of, I guess, improving the understandings or updating the understandings with science of how these mineral systems work. And then you can, once you sort of have that updated understanding and you look at all your data and you realise there's a lot of gaps in the data that, because there was just a historical mindset that, these gold deposits are just all like a sheet going this way, and if you drill some holes here and you don't get it, it's dead.
Tunnel vision.
Well, there's plenty of examples over the last 10 years that tell you that's certainly not the case. And, so a big part of the work that we'll be doing is actually going back to first principles. There's big areas where there's not even any soil geochemistry or understanding of the regolith. And so we need to go back to first principle. If we want to pull this apart and find the next million ounce standalone, if we want to get this project to 2 million ounces, we got to find some new stuff. And a lot of that will be going back to first principles exploration and geophysics, geochemistry, a lot of air core drilling, and really trying to go old school on this thing and get it up there. So
you said it earlier, juggling Serbia, there's a lot going on there, and now West Australia. I mean, surrounding you, there must be quite a substantial team, I can imagine, because otherwise this would be an absolute headache or a whiteboard and a half to try and manage it all and the logistics and everything. I mean, how are you, I guess, diversifying the team across both of these projects and then the projects or the potential deposits within all of that, and how was that sort of spread out from management and board all the way down to the explorers and the team both in country and in Serbia and in Western Australia?
Yeah, so the Yandel project has its own team. It's roughly sort of 10 guys up there full time. And so they're sort of managed by Richard Pugh, who's now executive director. And he's been working on that project for several years himself, as has Peter Langworthy, also now on the board. So it's got its own team. So I don't have to do much. You know, I said I was really happy to go to the site this week just to get my boots on the ground and see what it looks like. We got to look at some of the really good core that the guys put some great results out earlier this year. So it was really good to get my head around that. You know, the whole board went up. But yeah, from a management of that project, it runs pretty smoothly. The guys have been doing it for several years. They know what they're doing. You know, it was easy. I went there and everything runs smooth.
Yeah, that's helpful.
And same in Serbia. We've had the same team on the project now for 4 years. So we've got 25 people now on the ground in Serbia, mostly from the local community. And this team is, you know, we inherited half the team when we bought the project from El Dorado. So we've had some people in the team who are been on this project for 20 years. They know every rock, they know every person, and so yeah, that team runs itself as well. So from a geological management, I don't need to do too much. You know, I do travel to Serbia quite a bit. You know, we went there for an institutional site visit a few weeks ago, so I sort of take investors there, you know, show them around with the team, you know, also engage with government and stakeholders as well. But certainly, I guess my role is really just, you know, helping support them, really, you know, giving them the support they need to get the job done. So we sort of say, all right, well, you know, the goal is to try and double the resources. How are we going to do that? They come forward with a plan. I sort of review that plan with the board. We go, yep, go to it. Same with Yandel. So, you know, time zones. Serbia's not too bad. 6 hours behind. You know, you do end up having a few later nights.
Yeah, you have a few days where you just have gone the limited sleep. That's all.
Yeah, that's fine. And I sort of find for me, I you know, the couple of hours before I go to bed is when I'm looking at all the data. So you know, that's when everything's peaceful and quiet. And,
Far out. I mean, there's a lot going on, and that sort of encapsulates why there's going to be so much news flow coming out of Strickland over the course of the rest of this year and well into 2025 and onwards, really. I'm not going to put a cap on it. But I mean, encapsulating this conversation and some of the key takeaways that you would urge listeners, investors, just anyone consuming this and listening to this podcast, a takeaway from Strickland going forward, what would some of those key takeaways be?
Well, the key takeaways being, you know, certainly on the ASX, you know, if we just sort of ignore the producers and what have you for the time being, because they're in a different class, you know, out of all explorers, you know, you sort of got, I guess, two bags. You know, one's sort of doing more greenfields work, you know, looking for the new discovery. Obviously, you get really, you know, odds on that are pretty long.
High risk, high reward.
Yeah, high risk, high reward. But so then, you know, we're in a class that sort of explorers with an advanced stage, sort of resource stage asset. Most of those companies would have one project, you know, one quality project, if they're lucky. And, you know, so the key takeaway for Strickland is we got two. And that's pretty rare. In fact, I can't think of off the top of my head any other company that's got two. Yeah. And these two proper projects, you know, both projects have the potential to become mines. Both projects have huge strategic value for different reasons. Yandel, obviously strategic, given its proximity to an operating mine. And Serbia, it's strategic, given its potential scale, you know, world-class, tier one. So having two projects is very rare. Having almost $50 million of funding sitting behind us is non-existent as well. Yeah. So that's where I like to think, and I say it often, that, you know, Strickland is a fairly unique proposition. And I think, you know, even since the transaction for Rogozna closed at the beginning of July, you've seen some different trading in the shares. So Strickland historically was quite a volatile stock. You know, it could double off the back of a drill result coming out of Yandel. And if the next drill result wasn't what people were wanting, it would go back down. Yeah, and it was very volatile. Now, that's great for day traders, but not great for long-term shareholders. what we see with Strickland now, if you go back and look at the trading over the last 1 or 2 months, it's much more stable, really consistent volumes, and they're gradually growing, and we're starting to see institutional buying now as well as we spread the word, particularly to North America and Europe. And so now a lot of the volatility has disappeared. So even today, like cracking result, share price was up, I think early on 5-10%, right? Like, I'd love it to be more, but at the same
there's
time,
that stability now
it's
coming
got a
into
bit of stability to it. People are starting to recognise that
the word's getting out.
By doing the transaction with Rogozna, another way of looking at it is it's put a floor into the price and removed a lot of that volatility, where now we've got a really solid platform for growth. And we've got the bank balance behind us to do it. We don't need to go out and raise. So if any of these institutions want to buy shares, they have to buy it on the market. That's it.
Yeah.
And that's what, there's lots of people sort of with a lot of shares on issue. There's always the opportunity to sell now, and because there's buyers just sitting there. And so what I think the journey we're on now with Strickland is just, we got to just deliver what we say we're going to do, and that's what I'm really focused on. And hopefully, the market will continue to appreciate the story and have a nice, solid, consistent growth over the next 18 months. While we're going to drill 60,000 metres at Rogozna, at least another 20,000 at Yandel. We'll have a resource update for Yandel. We'll have probably 3 resource updates for Rogozna, all in the space of 18 months.
Yeah, there's a lot happening. And as you said at the beginning, it's your first podcast. I'm doubtful that it's going to be your last from the sounds of it with all the updates coming. But for listeners that want to follow, engage, potentially reach out to the team and ask questions about Strickland, where can they go and how can they get more information from the team?
Yeah, so at the moment, we just have an info email address on the website. So I do, people have been using that, and I have been having a steady stream of people getting in touch. We'll probably look to actually improve that a little bit over the next month or so, and just make it a bit easier for groups or people to get in touch and ask questions.
Okay, no, good. And again, there's the website, all the announcements go on the ASX STK. But yeah, thank you so much, Paul, for talking about it. We've covered a lot, and we didn't really even need to go into the whole macro drivers of gold. I think most people have seen the strength in that commodity recently, and you're in a right place, right time, which you mentioned earlier. But thank you so much for taking time to speak with me on the show today.
No worries. Thanks for having me, Ben.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share, and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.